Well, welcome everyone to Investor TV's live panel, The AI Wave, Opportunities, Disruptions, and What Really Comes Next. I'm Ashleigh Barry, and today we're going to do something a little bit different. We're not just talking about AI, we're decoding the real forces, reshaping power grids, balance sheets, business models, human behavior, and the next decade of investors. AI and robotics aren't on the horizon anymore. They are here, as we know, accelerating faster than most forecasts and fundamentally shifting how companies operate, scale, hire, even compete. And the leaders joining us today aren't just observers, they are building that infrastructure, the intelligence, and the systems defining this new era. So let's meet them. Joining me today are four incredible innovators shaping the frontier of AI. Brian Williamson, CEO and President of Jericho Energy Ventures, listed on the TSXV as JEV and the OTC as JROOF. A leader powering the AI era through next generation energy systems and grid scaling innovation. Now to Frédéric Chabot, head of corporate development at MindWalk AI, listed on the NASDAQ as HYFT, driving AI innovation at the intersection of health, capital markets, and intelligent decision making. Shahab Samimi, CEO of Humanoid Global. They are listed on the Canadian Securities Exchange as ROBO, in Frankfurt as 0XM1, and over the counter in the United States as RBOHF. A technologist really shaping the future of enterprise robotics and human-robot interaction. And my good friend Andrew Kiguel, Executive Chairman and CEO of Realbotix, listed on the TSXV as XBOT, over the counter in the US as XBOTF, and in Frankfurt as 76MOF. A pioneer building advanced, emotionally intelligent, AI-driven robotic systems. Gentlemen, we are thrilled to have you with us today.
Thanks for having us.
Thank you.
Thank you.
Yes, okay, so let's begin with the state of the AI wave. We're going to kick it off with the question on every investor's mind, I would believe. Is AI overhyped or underhyped, and by how much exactly? So Brian, I'm going to start with you because nobody really understands the real cost of compute acceleration better than the energy sector. Am I right?
That is right. And I think it's a great place to think about where the market is when you consider energy as the foundation for all of the compute. So we look at it in terms of where the numbers are, where the numbers are going, right? So if you think about the marketplace for AI and data centers as a whole, the installed capacity is about 38 gigawatts right now. So when you think about that and you say to yourself, okay, well, what does the projections look like? So most of the time people think, 3, 5, 10 years out, right? So when you look out to 2030, the signed on data center gigawatt numbers, 256 gigawatts, right? And so if you think about where we're going, where we are, and think about that number, right? When you say, where will we get to? So if you kind of ramp up double our continued addition rate, which is at 7,500, 7 gigawatts a year, you're looking at accelerating triple where we are year over year. So you're really only in the first inning. I mean, the expectation is we'll be lucky to get to 200 gigawatts by the end of 2030. So the numbers are growing every day. And the long pole in the tent is always energy. So everywhere you look, it's all about the energy shortfall. I mean, the demand for grid access and power is driving the push further and further out in terms of when the connect happens. So I think you're going to see a major shift if we're going to meet the demand numbers to focus on getting to the energy and not bringing the energy to the data centers.
Yeah, pretty impressive numbers, I would say. I like how you sort of frame it as we're only in the first inning. Some people think that, oh, we're so far ahead, but when you really break it down like that, it is quite fascinating. And Frédéric, I want to ask you, from the market and capital flow perspective, how mispriced is it at this moment?
I agree. We're still in the first inning. We're completing the first wave, which essentially was about digitizing language. Now the next wave will be AI that models complex systems like biology, chemistry, energy. And so we'll be moving away from language model into AI that can model these complex systems. And this is where the real value will be unlocked. Is these very powerful systems will start understanding better biology, energy, consumption, and so on. And so one would think that the value will then be expressed through AI domain-specific vertical AI platforms. So we're in the first couple of innings to build these platforms that will unlock these very complex systems. So the value is right in front of us, ahead of us.
Absolutely. Shahab, you are really living the robotics reality. Where would you say is the hype versus the true velocity of adoption?
I think that's a great question. I think we have to look at what AI layer we're on or we're really considering, because AI is not just the thing, it's a set of tools that are integrated into a number of other things. So, we have kind of the layer one, which is like the digital infrastructure, power, compute, data centers, the concentrated demand with the hyperscalers. Then you have like layer two, which is, companies already doing businesses or doing business like cloud providers, Google, Amazon, Tencent. So they're an existing business that's augmenting with AI. So then you have kind of like the third layer, which is these AI foundational models, the LLMs, Anthropics, OpenAI. So I think, a lot of people look and say, oh, it's a hype or a bubble, whichever, but you kind of have to look at this and see, is this really a race where a winner takes all, like the cloud providers, or is it really winner takes, there's space for different sort of winners, is really the fundamental question. And I don't think there's really a hype or a bubble, or else we wouldn't be here and we'd be doing something else. But I think there's a lot of investment going in. I think we have to look at, what materializes and what's the fastest ROI.
Thank you for that. We wouldn't be here, we'd be doing something else, but it seems like we're all we're all on the AI wave. You're all creating it. Andrew, from a Realbotix perspective, maybe you could bring us home with the human interaction angle here.
Yeah, and sort of to answer part of the initial question is I actually do think that parts of the AI sector are overblown. I get a little bit fearful that this is back to like the dot-com era or the blockchain era where people are just attaching that. And, we need to go take AI beyond just being sort of a sophisticated search engine. In other ways, I think it's underestimated. I had dinner with the CEO of an investment bank last night, and he said something that I thought was very profound. He said, with the way he's starting to learn and use AI, he thinks he could take his team of 60 people and cut it down to about 8. I thought that was very interesting. The other thing that he said was very interesting, he said, this is one of the first times in technology where the incumbents are actually positioned to lead in the new technology, in the AI, because it is so expensive. But back to the point with us is I do believe that certain parts of AI are underestimated, including the emotional capabilities of it and its ability to assist in things like loneliness, depression, and other forms of human interaction.
Yeah, absolutely. We'd like to take an audience question because, folks are really chiming in here after hearing your answers. And so we'll take one before we move on to adoption and market growth at this point. But, an anonymous attendee is just saying, hey, is there still a lot of untapped potential here? So I'll just throw that question out, whoever wants to answer it.
Well, I think the whole thing's untapped potential because we're all like, I would assume everybody on this panel, we're not selling televisions and dishwashers. We're all embarking on creating a new market that doesn't quite exist, or at least didn't exist 2 years ago. It's been the advancements in technology in the last 2 years that allow us to sort of start opening up and finding ways to use AI. But, I'm sure the panelists would have, similar views, I think.
Yeah, I mean, the big shock was ChatGPT. It came and it made everybody realize that it's human-like. Its humanness was quite impressive, but it's still a chat, platform. And to Andrew's point, it's a better search engine for sure. Now we're embarking on something way more difficult, which is building reasoning systems. So actually have a genuine intelligent input. and the variables involved in such systems are extremely important. So hence this massive amount of money invested in GPUs and clusters and that sort of infrastructure. We're talking millions of watts or gigawatts. That's quite important, and it's not by chance. It's the reflection of and the anticipation of what these big reasoning systems will be consuming in order to produce intelligence. So it's quite compelling.
Yeah, I would say, to add to Frédéric's point, I think one of the things that people don't realize is that in a lot of cases, the choice is built into what you do every day, right? So you don't just search Google, Bing, or whatever search engine you use. It's now doing automatic AI-enabled searches for you, and people don't even realize how it's built in. I mean, you think about customer service, right? 61% of customer service calls are handled by AI now. It's not a choice to use it. It's sort of getting built into everything we do every day. And I think you're just seeing that more and more from an overall adoption perspective and an expansion as an industry. There aren't many industries where it's just ingrained in your everyday life like that we've seen before.
Yeah, excellent point of view. In fact, that leads me to a question for Andrew. When you're talking about the customer service, and a question, just one last question here. I see a lot of questions in the chat. We are going to get to a lot of those answers, those topics that you're talking about. But Tim is asking, do you think robotics will reach a point where it's truly integrated into our daily lives? He's hoping to hear from you, Andrew, and, just piggybacking off of, what Brian just said.
Yes. So I think that's inevitable that, in 5 to 10 years, every single mall, hotel, shopping center, school, healthcare facility will have robots providing, assistance to humans and interacting with humans in ways that I don't think it's necessarily replacing jobs. I think in many ways it's assisting current jobs. I'll give you one quick example. There's a shortage in many parts of the world with respect to nursing staff, doctors. Robots have infinite patience, meaning they can sit there and provide some, assistance to people who are lonely or need monitoring. That's not necessarily replacing the job of a nurse. She can be out attending and doing other things, but it's providing assistance to that individual.
Excellent perspective. Let's move on now to market size and growth drivers. So Shahab, I'd like to ask you, you work at the center of, AI, robotics, convergence. What would you say is the current size and real growth of these markets, and what's actually driving that acceleration?
Yeah, I think the themes that we're seeing is AI being integrated into a number of different components and enterprise use cases. And additionally, likewise with robotics as well, what we're seeing here is more of a kind of roughly like $1 trillion market size opportunity, just because of the different layers, like I'd mentioned, that is kind of being augmented or enhanced. So, AI is delivering value already in data dense, decision heavy enterprise sectors, whether it's marketing and sales with campaign targeting or content generation or operations and supply chain. But more importantly, on the robotics side of things, the strongest ROI, where environments are, semi-structured and tasks are kind of repetitive and labor is scarce. So we're seeing that kind of in warehouse logistics automation, whether it's like pick and place, palletizing, or in manufacturing and process industries, whether it's automotive, electronics, chemicals. There's already value being generated, and it'll only grow from there as more adoption occurs, and call it public sentiment is enhanced with robotics and AI.
Thank you for that, Shahab. Andrew, I'd like to just, dovetail right into you regarding revenue forming first. Do you see it as infrastructure, robotics hardware, or would it be like vertical AI applications? Where do you really see revenue forming first?
So I think the AI portion is probably the quickest path to revenue. With respect to our business and selling humanoids, we're actually seeing sort of a combination of people ordering humanoid robots for use in customer service type roles. And we're having conversations with, healthcare and education type end users as well. But the adoption curve is I think going to be a little bit slower maybe than people anticipate. I don't see like robots in your house doing your dishes and walking your dog for a very long time.
Mhm.
And a lot of the things that we see online, I believe, are smoke and mirrors. I think if when you get behind a lot of these things, there's a lot of misleading videos that are posted online because they can go viral. But I think that ability to use AI to create autonomous actions in hardware or a robot really is the key. And I think that's where we focus in our company, which is how do we get robots to act autonomously and get them become guided or have sort of the brain that is AI led.
Yeah, I'm actually really glad that you brought that up about, some of the things that are out there that, you can't trust or that are artificial. Frédéric, I'd like to move on to you. Companies are experimenting really now more than deploying. What would you say they're testing? AI tools, agents, robots, and where are the early wins emerging? So that's my first
Right.
question. But I also want to just pull a question in here from an attendee as well. What makes MindWalk different from its competitors as well? So if you could sort of weave that into the fabric of the conversation.
Yes, that's both a very good question. So we're in the sciences, so the scientific approach is rigorous. So obviously, pharma has a very keen interest in seeing these new technologies emerge, but also validate it. So it then becomes a very complicated problem and process. Moreover, having a different sort of platform coming in the business and the industry is also requiring a lot of dialogue with our partners who are more used to wet lab sort of validation and platform. So then when you have a lab scientist talking to a data scientist, these are completely two different fields with two different approaches. So early on, we managed to have, for example, immunogenicity screening platform that enables us to predict way before the clinical trial if some drugs that we're designing or developing for a client or for ourselves is going to have some problematic adverse effect. Typically, these sorts of data points will come way later in the game, probably 10 years. And now you actually can provide some very good information within the next first couple months. So you dramatically reduce the attrition rate, which is what pharma is about. Can we de-risk this before we go into humans? Can we de-risk the adverse effect to humans? And to the auditors, the viewers' question, so we were late 2018. We saw this AI, wave coming at us. So we were starting to see from academia out to the industry workflows, some software. So we needed to pivot accordingly because we knew it would make some of our platform at some point obsolete. So we started to embark into an M&A work in order to figure out which technology would actually bring us value, not just like more speed and more, data and big data. We didn't buy into that. And then we've identified this unique technology that is an extremely powerful one, but more importantly, that enables us from the get-go to build a reasoning system, not just go into, more simplistic modeling. And so pharma is going through a very problematic stage right now is they have too much data and all that data is siloed. And as such, nobody really in the database world has a solution to help pharma bridge all these different modalities into a platform, a single platform, so to speak. We've achieved that. And this is quite important because once pharma realizes that they can actually upload historical data of all these failed programs and start reviewing or revisiting these failed programs, they can actually add an additional amount of insights that will probably rescue some of the failed programs in the first place. And so we're talking billions of dollars of sunk economic costs in these failed programs that could at some point be revitalized.
So what's really interesting to me is that you saw this in 2018. 2018. So we're talking about 7 years ago. Something
Yes.
went off in your mind saying, we're being, technology is becoming smarter, faster. So I think that's fascinating that you jumped on and took advantage of that immediately, and developed something that is unique to you. So, Brian, we'll move on. I just have a question for you around, the power demand. We talked about this in the beginning of our discussion, but are you seeing the experimentation really translate into unexpected power demand or new infrastructure requirements specifically?
Yeah, so one of the things that is happening is you have a grid system that really hasn't grown. And I'll just talk domestically in the US. The grid system has been pretty stagnant. Generation, other than renewables, has been pretty stagnant for quite a while now. So what you're all of a sudden seeing is this enormous load demand in densely populated areas. So almost everybody across the United States has seen a power price surge, retail, industrial, across the board. And almost all of that is driven by the AI demand, the data center demand. And so you're seeing this social friction where people want the data centers and they want AI to come online, but they also don't want the impact socially on their power prices. And so if you look at PJM, right, PJM is one of the biggest interconnect grids in the United States, and it's also home to Loudoun County, Virginia, which is ground zero for data center development. The PJM ratepayers and customers have had sticker shock year over year, month over month in terms of power price increases. So you have this growing friction with AI wanting grid interconnect, but the grid not being sustainable from a pricing and from a volume perspective. And so, you're getting 5 and 10 year timelines for interconnect. And, what they're now moving to is how do we price this? How do we deliver these solutions without disrupting our user bases? Because the AI user base is so different, right? Demand has been so flat and consistent for industrials, for consumers. And so what you're starting to see is the AI loads going into self-generation mode, where they're building off-grid, they're building their own power system so that they can have faster uptime, faster connect from their perspective. So the grid is struggling to keep up. I mean, and you have a real challenge because how much more can consumers take in terms of price from?
Yeah, on a personal note, Brian, I'm so glad you brought that up. I live in Virginia, I'm in the DC area. And so you talk about Loudoun County, other counties as well. It is unbelievable. You drive around and, each month something new is going up and they go up so quickly. And you think, how can that be sustained? So excellent points there. We're moving on now. Andrew, I would like to ask you which business really the business functions, would you say, are benefiting most from AI right now?
Good question. Harvard did a study that came out earlier this year, and they said that the number one use case amongst many for AI is actually companionship and therapy. And I think that speaks to the state of the world right now that many people identify as being lonely. That part of longevity is having social circles. And so a very easy, low-hanging fruit, in my opinion, for AI is that area. And I think that also removes part of this concern about, who's influencing the AI or the information that's given, because you're really dealing with more emotional type issues. I think for the perspective of our company, we really believe that for AI and robotics to be successful, they really need to be connected through something. And for us, that's vision. And so what we've successfully been able to do is connect vision to AI so that it can actually have a brain and interpret things like, what is this person's emotions like right now? Are they happy? Are they sad? Things like being able to, read and see and interpret things through the AI that I think can lead to successful use cases in more emotional and intellectual forms as opposed to just physical tasks.
Incredible innovation there, Andrew, I would say. Shahab, where do you think robotics really deliver the strongest ROI today?
Yeah, I think I touched on that, and that was kind of warehouse logistics automation. We're seeing a lot of ROI in respect to measurable gains on throughput, injury prevention, in that warehouse sort of logistics sort of aspect of things. We're seeing it in manufacturing as well, whether it's automotive, chemical industry, any sort of sector that really produces harm or issues for really the human on that aspect of things. So I think most of the promising ROI is also emerging in that sort of inspection and maintenance, whether it's energy, utilities, infrastructure, where we're seeing kind of mobile and like quadrupod sort of robots that can reduce downtime and really mitigate the human exposure to dangerous environments is really with the uptick that we're seeing.
Yeah, appreciate that. So I'm going to stop here just for a second and bring in an audience question, and I'll just throw this out to the panelists. Anybody can take it. The one question, which is interesting, looking at the current AI landscape, which countries or regions do you think are best positioned to lead the AI and robotics revolution, and why?
I can take a crack at that one, but I think my colleagues will agree here. First and foremost, it's all about energy. Mm-hmm. So whatever country has the most abundant, accessible energy, or are on their way to build a grid that's going to tolerate this incredible high amount of consumption. Mm-hmm. So that's first and foremost. And then I would say USA, North America are by far the best places to launch.
Good answer. I like that answer, Frédéric. Did you want to chime in at all, Brian?
Yeah, I think that, to Frédéric's point, I think North America, the US and Canada have an incredible resource that is natural gas. I think that it often gets lost because prices have been low for so long. The access to cheap, always available power like natural gas shouldn't be understated. And we have it in incredible formations and opportunities here in North America. We struggle connecting pipelines. We haven't gotten any better at that in permitting pipelines, but the reality is the amount of gas we have is nothing short of amazing. And we have some of the greatest resources in the world that are barely being tapped right now to generate energy in the United States. And I think that's changing dramatically. When you look at the Marcellus, when you look at West Texas, when you look at some of the things in Oklahoma, Alberta, you can move, billions and billions of cubic feet of gas, right? Which is what we think is going to be the key to delivering the energy for this, is the ability to get that gas to sites that are developable for data centers. And we have so much of it, just so much.
Untapped, right? Really?
Untapped.
Yeah. So let's talk about sector positioning. Who's leading, who's falling behind? Frédéric, I'll ask you, who would you say is out front, and who is falling behind, and what really explains that gap when it comes to AI?
Generic AI or very specific AI? I think it's two distinct questions. So we see now, obviously, OpenAI is at the forefront of this wave. Now they're starting to lose market shares to more specialized AI or more responsive AI. So there's a bit of a race there. In our field, there's a couple of companies that are private, unfortunately, which would have made some pretty good investment, like Isomorphic Labs, in Zyra, which is David Baker's lab from MIT. They won the Nobel Prize on chemistry last year. Very innovative and contributive. They contribute a lot of their software to the community. So that's also an interesting business model for them. On public side of things, not that many, frankly. Aside from us, we don't see a lot of highly specialized AI in the life sciences per se.
And I would ask you, Brian, from the energy lens, what would you say, which industries are, I guess, straining capacity because of AI, and who isn't really preparing?
Most of the things we're seeing are hyperscaler centric in terms of demand and capacity, with the balance sheets that are focused on it. scale is not really going to be an issue for those folks. The industries that we've not seen, we've seen energy actually step in a little bit. We've used it to evaluate subsurface geology, subsurface performance. It's pretty incredible, but that's really scratching the surface in terms of where energy could go with AI, actually using it as opposed to supplying it.
And so, given that, we're going to stop and just ask, throw out a couple questions here from the audience. So one person is asking, given the rapid pace of development in AI, how can we as investors ensure we're backing the right companies without jumping on every hype wave?
That's for sure a challenge for investors. And part of answering your last question that leads into this is you're seeing a lot of what I would call tech heavyweights battling it out with sort of new companies. And so if you think about who are the big AI guys out there right now, it would be like, Google has Gemini, Meta has Llama. Then you have, Grok, which is Tesla. And then you have some other guys like ChatGPT, which sort of kick things off, Perplexity, some of these newer names. A lot of these companies are difficult to invest in because they're private or they're mixed in with these other businesses. And so I think when investors are looking at this, there's really a bit of okay, I can go for the heavyweight. In some ways, investing in NVIDIA gives you exposure to AI. Investing in copper gives you exposure to AI because it's a required thing in the power sector. But you can look at sort of some of the business plans for the companies, the people on the panel here and people like us and say, okay, do I see the business plan coming to fruition? And of course, there's a lot of startups in the space. Not all of them will survive. It's sort of like the early days of the internet, but certainly the ones that do will provide investors with pretty solid returns.
Anyone else want to chime in on that? There's also a question. Oh, please go ahead.
Yeah, I was going to say, I think it really comes down to the investor, their risk profile, what are they looking to achieve. So what we're trying to do at Humanoid Global is really build a risk mitigated, diversified portfolio construction of early stage, mid stage, late stage, so stage agnostic and really investing in the value chain within the robotics sector, whether it's hardware, software, anybody building actuators, sensors, or any sort of enablers, or AI enablers or data capture in that respect. So I think that's a tough question to answer because it's going to be very subjective on that investor and what they're looking for. So it's just a matter of doing your diligence and understanding your profile.
Absolutely. I like this question here now, also in the robotics space. How do you feel about the ethical implications of AI and robotics? And is there a line we shouldn't cross in terms of innovation? Is a question that just popped up. And I can
handle that as probably most appropriate to us as people who are making robots. Ethically, I think there's a few issues. So what is like the veracity of the information that's coming through the robot and the AI? Can it hurt people? How is it being targeted? We certainly put up a lot of guardrails. We're not targeting robots for use by anybody under the age of 20. And certainly even in a school setting, it would have a lot of guardrails in terms of being a teacher's assistant in that form. There's a lot to unpack as we move forward. And I think every robotics and AI company is dealing and grappling with the issues of like, what are the guardrails? What are the ethics? Like, where does the information come from? And certainly we've seen cases where even with AI, I think in the last thing I saw, even the best AI is only about 70% accurate. And because it can sort of feed on its own inaccuracies, it can build around that. And you can really build a spiral of having AI that's highly inaccurate in the future, or perhaps even politically motivated. So there's a lot of issues to deal with, but with respect to robotics and the ethics behind it, I mean, I don't think anybody would have an issue with robots working in a factory and doing things that might be harmful for humans that can be done more effectively by robots. In terms of using them in sort of hospitals or schools, I would say the same thing. If there's an assistive case study to be made there, I don't see what the ethics behind it would be other than, again, treatment of confidential information, making sure that it's a safe environment.
Yeah, interesting topic. Shahab, do you have any thoughts on that?
Yeah, I think we're still early in the ethics department, just as we saw with the LLMs that came out and everybody, you know, kind of pushing for some sort of standardization or ethical guardrails. I think we'll see that down the pipeline here over the next few years as robotics become more ingrained within daily life. Um, so I think it's early to say, but it is in the pipeline, and it will eventually happen in respect to, how does human robot interactions occur and how they're programmed as well.
Great. And Shahab, I know you have to part a little early today. So I'm just going to ask you a couple more questions because I know investors just love hearing from you. So, what would you say when we're talking about why companies aren't scaling yet? Because many are not. Well, what are the core bottlenecks, would you say, are stopping companies from adopting AI and robotics specifically at scale?
I think there's about a few different factors. So some of these blockers are really isolated to more like economics, reliability, and just organizational readiness. So one is like cost and payback. Although like unit cost per robotics is falling, especially for like a lot of the general purpose humanoid systems. It still sits within kind of the tens of thousands of dollars. So there needs to be some sort of return on investment payback for other sectors as well to have greater adoption and lower unit cost. There's also technical limitations as well, whether it's power, battery life, whether it's robustness, whether it's, the robot being able to interact within a dynamic environment. These are still challenging. And so the use cases right now are narrow, set of tasks of robots that can take over kind of that reliability for even the tasks. And then other aspects are as kind of like supply chain standardization. There's a lot happening. There's a lot of innovation happening right now on the supply chain in that respect. And, a lot of companies are augmenting what they were, machining and tooling that they were doing and now working on a lot of different robots. But I think the biggest bottleneck is potentially kind of that people and process. A lot of organizations lack integration talent. They lack kind of clear automation roadmaps. There's a workforce transition kind of that's occurring as well in a lot of different organizations. So it's having those plans in place and then launching kind of pilots before they really become programs and ingrained within the enterprise.
I love that you mentioned supply chain because that leads me perfectly into a question from an attendee where it says, where do we stand today in terms of capability and reliability? And are we ready for large scale autonomous robots? What are your thoughts on that, Shahab?
Are we ready for large-scale autonomous robots? I think we still have supply chain challenges. A lot of the supply chain is still made in Asia and China. That is leading kind of the sector on supply chain just because of the low cost of labor, low cost of having they are a manufacturing hub. So there's a lot of augmentation happening there. So I think supply chain is probably one of the greatest bottlenecks within the robotics sector. There's a lot of North American companies that are repositioning and augmenting what they're doing to focus and address this supply chain constraint. But a lot of supply chain comes from Japan, Europe, and China right now at this time from what we're seeing. So I think over the next few years we'll see a lot more enhancements as government starts to provide a lot more funding to a lot more manufacturing facilities within North America to address the supply chain and operational sort of bottlenecks.
Perfect. And Shahab, I know you have to leave a little bit early, so I wanted to give you the opportunity of any final thoughts that you have, and also, speaking directly to investors and the fact that being on this webinar right now is so important, and why.
Yeah, no, I appreciate the time. I think, Humanoid Global is really trying to invest in technologies that are improving relationships between humans and robots within enterprise settings. And so whether it's sectors like automotive, chemicals, warehousing, logistics, robots are spending a lot more time, becoming normalized within this kind of human to robot. We'll always have that human in the loop interaction for the time being. We'll definitely see guardrails and call it standardization and ethical sort of aspects come to play as well. But I think over the next few years here, we're going to see a lot more general purpose humanoid systems be adopted, just like we had that EV adoption curve. Things started to be adopted rapidly and rapidly. So it's just putting in the right structured environments as cost falls and payback and return on investments increase, and supply chains and standardizations mature. We'll see a lot more integration within human society.
Well, Shahab, thank you so much for your time and your expertise. We certainly appreciate it. And of course, if anybody wants to reach out directly to Humanoid Global, all their information, of course, is just look up their stock symbols right there on the screen. So thanks again, Shahab. We really appreciate your time today.
Thank you, everybody. Bye.
All right. So Andrew, I'd like to ask you, when we're talking about, AI and its ability to reshape business models and culture, what would you say really happens, organizational structure as AI becomes central?
Yeah, and also just to touch base on the last question, I don't know that I completely agree with that. We manufacture in the US, and when you manufacture in the US and you can control your supply chain, I think from our perspective, actually building robots, we feel like we have that under control. In terms of organizations, that I gave the story earlier, which is, is AI and robotics going to replace people and jobs or enhance them? And it's a combination of both. If you look at the invention of the automobile, that left a lot of horses unemployed, because people for a long time thought that cars were just a gimmick. I think the invention of email probably led for the traditional mail system to have to pivot. And I see the same thing happening here with what happened with the internet. Is I believe robotics and AI will make some jobs obsolete, but will create a lot of better jobs. And on the industrial side, be able to sort of leave behind some sort of like low skilled type jobs where those people can now be re-educated into better roles. And again, on the emotional and intellectual side, that robots can provide value add by doing things that humans can't do. So speaking in multiple languages, providing instruction, information, and consistency along those lines. And so I think it's going to be a lot of sort of back and forth till we get it right. But my vision is still in 5 years, you're going to see robots in every school, hospital, shopping mall, hotel, casino around the world.
Yes, and I know that you just had one right in the heart of New York City, and there was a lot of interest, right, around that. And you were so confident in your product that you were able to leave her. Aria is her name. You were able to leave her, and she was
You've
interacting.
interviewed her before, yeah?
Yeah, I interviewed her before. She's amazing, and she was interacting, and it was just there was a lot of hype.
Yeah. So for the audience, we are humanoid robots. We have characters and personalities behind them, and we have been very fearless in putting them into sort of environments where they can just interact with people. We left a robot in Times Square for a store opening for about 5 days. We turned her to the street and just had her interacting with people in various languages, telling jokes, but also providing some utility, knowing like the products in the store, where the bathrooms are, maybe where to even get a hamburger or a coffee. And so I do feel that from our perspective, autonomy for robots is really important, and being able to leave them unattended in sort of unscripted situations demonstrates the value of what robots can do to people. Seeing is believing.
Yes, certainly. It's obviously the way of the future, and I'm sure when you came back and to find her, you were very pleasantly surprised with how she was able to sort of interact with folks there in New York.
We're always surprised by the AI is just so smart, the way we've trained it to be sort of funny and humorous and engage with people, which is the goal. So I'm always pleasantly surprised when I see that it works as it's supposed to.
Absolutely. So Frédéric, I'll move on to you around sort of cultural shifts that you see happening inside organizations? I know Andrew was talking about how they would be replaced and, you know, the staff would be considerably cut. What are you seeing inside organizations?
I'm more of an optimist. Of course, there'll be some reshuffling for sure. I think at the end of the day, it's a leverage, it's an enhancement. Yeah, maybe cut 20, 50 jobs, but at the end of the day, you'll hire more people again because each individual will be empowered by these tools. In human history, we've in the last 200 years, we've accelerated dramatically. That's a function of freeing up space and energy. So from the barrel of oil to electricity to whatever innovation happened throughout that segment, humans are longing to free up space and energy, and it's the same thing now. So if I can have an AI redact my text that would traditionally take me 2-3 days, and it does it in a couple of minutes because it's fine tuned to my perspective and so on. That's amazing. But this acceleration will keep on going. So yeah, there'll be some shifts, but I think at the end of the day, it's not going to be the point. I think the point will be that we as a civilization will be a lot more productive. And if we can get that production into play and then keep innovating, I think that's going to be an amazing time.
Yeah, without sacrificing quality, right? I mean, that's the main point, is that we could be more productive.
That's the main point. Quality. Yeah. So quality is always a function of so many variables that we humans have a tendency to overlook because we don't process the data the same way that these machines can. And they'll definitely come and support us in being probably more accurate, right? Which is a trait in humans to not be accurate either.
Absolutely. So let's talk about, Brian, I want to ask you this question. What you really think needs to happen for AI-driven energy and, infrastructure to become a standard corporate budget item?
Yeah, I mean, the spend is a lot, right? At the end of the day, people are adjusting to the amount of money that has to be spent. And if you were to break apart the current GDP numbers in the United States, what you would see is that essentially AI is driving almost all of the growth, right? You're seeing this massive growth. And, we went from a world that for a time was really focused on scaling down our energy assets and moving to more renewables to a world that's saying we need energy, period. Right? There's no more sort of talk about what type of energy. It's just energy and the demand for energy. And what's happened is that, with the development of renewables, you have this juxtaposed position in places like California where you have incredible talent, incredible technology, the highest energy cost in America, 55 cents a kilowatt hour. Can you imagine building AI data centers at 55 cents? I mean, it's, 5 times the rate at most of sort of the Midwest power numbers. So I think you're seeing a shift to where people are realizing that what we call the flyover part of America or North America more broadly is actually where you're going to find a more sustainable cost for the foundation for AI. So if you're going to keep building and, the compute is incredible. I mean, the things that it can accomplish are incredible, but, the bottleneck is going to be accessing the facilities and the capacity to do it. I mean, you've seen the rise in Texas. You're seeing it sort of in that flyover part of America now where all the data centers are going. I mean, Google's kind of leading the charge, building these fiber networks in the middle of the country saying, look, we got to get this done because the reality is we're going to price the world out of use cases if we keep focusing on the coast.
Yeah, as you're speaking, I'm thinking regulation. And is it enabling or slowing corporate AI adoption?
Well, so you have this, clashing of cultures, right? You have utilities who bear the last mile of all of the connectivity. At the end of the day, they bear all the risk, and they're regulated based return entities. So if it goes wrong, it's on them. If consumers get hurt, it's on them. But you have AI companies standing at the door saying, we need this much power, this fast, and we need it always available to us to shut off other people. And so you have this continued friction happening. And that's why I think you're going to see this push to create what I'll call sort of vertically integrated energy solutions, almost like mini utilities that stand alone and supply campuses the energy and the foundation it needs to grow and build at the pace that you're hearing from Frédéric and Andrew and others that are in the space, right? Because you're not going to get there if you keep relying on the utilities to deliver the power that's going to run these data centers.
And I'll ask, actually both of you, Frédéric and Andrew, do you see regulation shaping demand for, well, first, Andrew, I can throw this out to you around human robot interaction technologies, and then of course, the work you're doing at MindWalk, Frédéric. Andrew, I'll ask you to answer first.
Yes, and I think you saw that the current U.S. administration was talking about robots a lot yesterday, and there's a lot of things when I talk to some of my peers and people, like if you're having autonomous tools run by AI that have the capability of potentially hurting people or damaging things, there's going to be all kinds of regulation that has to go around that. There needs to be regulation around, again, where does the information that you share with AI go? There needs to be regulation around, like, how do you ensure the veracity of the AI? So certainly it will shape, I think, how things are developed as opposed to the demand. And I think that governments right now all over the world are sort of grappling with how do you control this without containing it.
So in our case, we're heavily regulated, obviously, for evident reasons, FDA being the epicenter of these regulations. So now the current administration is a pretty historically a disruptive one, relying on innovation, which is totally welcome, especially for us. There's also the idea of phasing out animal trials, for instance, right? Because at the end of the day, they're more or less relevant to humans, even though some would argue the genome of a mice is closer to human than a rabbit. But at the end of the day, yeah, you always get tricked by biology being so complex that humans do create adverse effects that were unforeseen with traditional animal platform. And so now the administration wants to phase that out as well. In order to remedy that, then you need to build platforms that are going to provide data to indicate, down the line, are we going to hurt the patient or not? And so this is key. So, but in order to achieve this, you need a special data architecture that will enable you to read into the data in a way, or to reason the data in a way that's going to be productive to potential identification of human adverse effects. So as long as the regulations and politicians are on the innovation bandwagon and they actually encourage it, then I think we're in a good place. Conservatism on that level has been very negative historically.
Interesting thoughts. I appreciate that, Frédéric. Okay, so let's talk about investable opportunities. Brian, I'll start with you. Where would you say, across the AI stack, you see the clearest investable opportunities emerging right now?
So we're biased, obviously. So for us, we focus on the foundational pieces for it because everything sort of grows from there. So I think one of the most recently re-rated but underappreciated markets is the U.S. energy space and the Canadian energy space, for that matter, right? So, we have taken a global approach where oil and gas are essentially no longer investable, right? So if you look at the allocators of capital, the large ones, all of the foundations, all of the pension funds, all of the index funds, you find very, very, very little, if any, oil and gas allocation there. They obfuscate it by the way that they put together the indexes now, but the reality is that what's happening is there's this chasm that has to be crossed where you have AI demanding all this power, all of this energy, and the folks that provide it have been villainized for so long that the market hasn't invested in them. So there's an underinvestment in those asset classes. So if people come around to it, I think you're going to find that your oil gas infrastructure plays, the ability to move those products, the pipes that move them, are going to be a huge opportunity overall, because pretty hard to put new things in the ground in North America anymore. Right of ways, endowments, everybody has something to say, whether it's the bird watchers, the PTA, or anybody in between. Putting a pipeline in the ground is really hard. I mean, you saw it in Canada. They put a pipeline that runs right across North America, to move gas out to the coast. It took them 12 years. We've shut down and started the Keystone pipeline after 20 years. And we've considered cornfields in Nebraska environmentally sensitive. So to me, the inability to move product is a challenge. So what you're seeing is two things. One is, limited investment in those spaces are driving the demand for what exists now. And they're fairly concentrated assets. So the opportunity to own them at incredibly cheap prices, I mean, that's our whole story. It's cheap energy has a higher purpose, right? So now you have this opportunity to create a world where energy is the key to expanding on and exploding in the AI space.
Frédéric, any thoughts on that?
Yeah. Life sciences obviously are pivoting toward integrating AI, but more specifically to address obviously some obvious needs for humans. So longevity, aging are now addressable as potentially a disease or a strategy to extend health span, lifespan. And in a declining birth rate environment, two solutions, robots, that's going to come in and help us mitigate some of that shortage, but also extending life, where humans will probably be in a position to enjoy, hopefully a few additional decades. That'd be great, and even more down the line, which all ties to precision medicine. So is there a way for us to produce platforms, build platforms that are going to address specifically down to your own genome therapeutic or a solution that's going to help you get there? So massive.
Yeah, listen, before you answer, Andrew, Frédéric, I'm so glad that you brought that up around precision medicine and the lives it saves. So thank you for the work that you're doing. Andrew, I'll ask you.
Sure. Our premise is very simple, and we're sort of looking at robotics in a much more basic way. I'm not building robots to do, karate chops and backflips. We're sort of enabling our robots to show emotion, to be able to observe emotion, to be able to speak in various languages, to use an actual vision system to interpret what it sees in ways that can be useful to humans today. And, our robots are available. We're selling them, and they're being used in places like convention centers. They're being sold to families that have autistic children. Various use cases. And so from our standpoint, we're really casting a very wide net in terms of how robots can be used. But again, we're looking at it from much more simplistic, basic use case, which is human interaction. And that's where we really specialize.
Yes, and it's absolutely life-changing work. You and I have spoken about that. All of us here on this panel doing incredible work. So with just the couple minutes that we have left on this awesome discussion, I'm going to ask you, we'll do like a quick round, what would you say for the amazing people that have joined us, the smartest move is an investor can make right now to prepare for the next wave of AI? And Brian, I'll start with you.
So I think you have to look, at the world and where it's going and not where it's been. And that's, easy to say, harder to do, because most people think about investing, and the things that look easiest to invest in are usually already over those stories. It's the things that are hard to find. That's where you need to focus. And to me, the opportunity is, where's it going, not where's it been. And where's it going is all about sort of development of these campuses and the opportunities. So when you think about that vertical stack in AI, at the very top, you have your OpenAI, your ChatGPT, and those type of folks, your lovables, all those type of things. But in between there and the ground, You have an awful interesting play there, whether it be the construction side, the energy side, the pipe side. All of these pieces are the foundation. So I think looking at them and how they're positioned to get there, I think is really going to be key in terms of where you invest your capital and how you can make a return in this marketplace.
Frédéric?
In Canadian language, skate where the puck is going, not where it is. It's a game of velocity. So try to identify companies that are highly focused on building platforms. Platform is key here, and in order to validate platform, companies that do produce case studies do land, partnerships with credible groups, and also identify companies that do contribute, on patents. Patents are key. If you're sophisticated enough and committed enough to produce patents, this is key. So try to look for these traits, and then you got to look on the long term which companies have the ability to survive different downturns, and also monetize and be opportunistic on over bullish markets. Then I think you have a clear winner.
Excellent. Andrew?
Right. So, I mean, obviously, I love our company, and I agree with the other panelists have said. But I'd say a really interesting way to get exposure to AI, and what I think is a relatively safe way, is buy copper, buy a copper ETF. There's a few out there. It's an essential ingredient, and based on what things I'm seeing, there's probably going to be a shortage of it next year, which should lead to the price increasing. But that's a very lower level infrastructure way to play the space, as opposed to taking the risks on the individual companies.
Fantastic. Well, I just want to say a huge thank you to Brian, Frédéric, Andrew, and Shahab, who had to leave us early, and to all of you investors, hundreds of you, for joining us. AI is not a trend. Clearly, it's a structural shift. And for those who understand the intersection of energy, intelligence, robotics, and human interaction, this will shape truly the next decade of innovation, as you just heard. So thank you all for being here and for being part of the movement towards smarter, stronger AI investment. And we'll see you next time on Investor TV.